said secondaries are venture capital for chickens. Very simply put, liquidity is the oil that allows the flywheel to move in the venture marketplace, right? I'm not saying anything that all of you guys know that, right? And ladies know that. But we got to the point where the flywheel wasn't working and things just tumbled down in 2022 and since then. And we needed a transformation, and at the center of that transformation was secondaries. Secondaries as a percentage of venture activity. It's an interesting statistic. Back in 2010, secondaries were 3% of all venture activity. That increase doubled to 6% in 2015, then went to 16% in 2020, and in 2024, it's almost 30% of the marketplace. So secondaries have almost in a way become primary. So the secondary marketplace is here to say that we've got something like over 1,400 unicorns from 2013 to today that have not yet gone public, representing about $6 trillion. So there's a lot of money in there for continued secondaries. So that's one point I'll say, is that secondaries are going to continue to be large. And there are a number of very good players in there. One of the people I had on a panel that I was chairing at that event was a friend of mine here in Baltimore, Frank Tower, who works with a secondary firm here in Baltimore called Savano Capital. I've got nothing to do with them, but he made an interesting point. He said secondaries are venture capital for chickens. And in a way, that's good. You're not taking the massive amount of risk that you're taking as an early stage investor, and the timeline to a liquidity event is shorter. So having an venture portfolio that has secondaries in it makes some sense.